Good morning, Armor Insiders. Welcome to the morning meeting of this virtual hedge fund experience. Thanks for joining me. Hope you had a great weekend. You're looking at a chart of the momentum index, MTUM. We're going to talk about that in a minute. We're going to go over the risk monitor. We're going to talk about exit strategies today. So while we're having tons of fun, making a lot of money, and I expect it to go on forever, as we all do, we know there'll be some very swift, very vicious sell-offs. Okay, so we got to talk about how we're going to handle that. We have to have that strategy in place before we need it. So when it happens, we're not a deer in the headlights. We can just execute. So we're going to talk about that. What is the strategy to protect capital when this stratospheric run is over? I'm going to share with you a chart that makes me think about what is going on in the world. There is a melt up in risk assets going on everywhere. I'm going to show you a chart that is 35 years in the making. It's kind of crazy. And then, of course, we're going to talk real quick about two stocks that are at the top of my whiteboard, things I may add to the portfolio. So on the one hand, talking about risk management, I want a strategy in place. I want to know how we have to react if we see it. And on the other hand, I'm going to keep managing success. I'm going to keep riding this mechanical bull. I'm going to share with you two ideas at the top of my list that I may find that may find their way into my portfolio today. Actually, maybe I'll make it four. Let's talk four stocks that I might add to the portfolio today. Of course, anything new that's added means I have to remove something else or reduce something else. So it really makes you think hard about managing the success of your portfolio. And then we'll wrap it up with a quick discussion about the Armor Carry Trade Friday and something very important about that trade that I want to share with you. We smart trade on this desk. We don't day trade. There's not a compulsion to put money to work. So we'll go over that. All right. As always, by joining me here on the desk, you are a portfolio manager at a hedge fund. That's what you're doing. So you're coming into the morning meeting. Maybe there's some bagel and Nova on the sideboard. Maybe you're having some coffee. And we're going to talk about how to run money together. And then we're going to go out. Bell's going to ring at 9:30. We each have our own tranche of capital, and we're going to manage it at this virtual hedge fund. So figure out your strategy, make it your own. I'm going to share with you what I'm doing personally. And then at the end of the day, you have to be the smart money. Okay. So diving in, I want to look at this chart with you of the momentum index. Okay. That is an unsustainable and incredible uptrend on an ETF. This is not an individual stock. This is a momentum index. Things like Eli Lilly are in there. Things like the Hateful Eight are in there. You know, NVIDIA is in there, all kinds of these aggressive growth stocks, but all kinds of stocks. I don't think you'd call Eli Lilly aggressive growth, right? So what's happening here is an unsustainable and incredible melt up. This yellow line here is the third standard deviation above the 200-day moving average, right? 3 standard deviations is somewhere above 95, 96%, I think, of the average expected move, okay, on a regular curve. And it's walking up that line. Usually that type of action is reserved for like a Bitcoin miner or a micro cap stock that's been discovered. That's not normal for an ETF. So it really makes me think two things. Number one, and the focus of this conversation today is risk management. So I'm going to launch into for you what I intend to do to protect capital. Now is the time for you and me to figure out the exit strategy. So when you see it happening, you're not a deer in the headlights. Generally, and maybe I would say always, ever since I've been doing it, these types of rallies end on a Monday morning melt up. That will be the beginning of some sort of sell-off. The risk monitor will not save us. The risk monitor is designed to help us manage our core assets following institutional footprint. First sell-off back down to key moving averages does not change the risk monitor from being green. So what's happened here is if you look at this chart of momentum, we're getting so far away from the key moving averages that there's air down to these moving averages that the risk monitor won't even begin to try to change, because for two reasons. Number one, we're in a massive uptrend, and a sell-off down to the 50 or 200-day will ultimately be bullish for the longer term. You need to have corrections and shakeouts along the way for the longer term. Before this bull market's over, it would probably take 3 to 6 months of sideways chop, which, by the way, can devastate a portfolio if we don't handle that right. So we'll talk about that in the future. This is what I'm going to do. I'm going to cut Every position down 25%. I don't care if it's energy, precious metals, technology, it doesn't make a difference. Everything gets cut 25%. It makes it real easy. I run through my portfolios, boom, 25% out, bang, bang, bang. 75% long, 25% US Treasury bills that will not be put back to work in the equity market until the next risk on buy signal using the Armor swing algo for the S&P, okay? If things get worse, and it's not just a sell off to the upward trend in moving averages, but something more grotesque, then I'll use that 25% to hedge the portfolio. I might use double or straight 1-to-1 inverse ETFs. Take my risk off, take more of my risk off. Not disturb my long-term positions because risk monitor is still green, but manage the risk down to that key support level. And either the risk monitor then turns red and I'm raising cash and I'm short at higher levels and I may carry that position, or we get a follow-on buy trigger. I book my profit in the short side and I put that 25% cash back to work right on the 50-day moving average because we have a longer-term bull market, okay? We don't know that yet. I just want you, that's my strategy, subject to change. I might change it a bit, but that's what I'm looking to do. You've got to figure out your own strategy. And the purpose of my call this morning is in the midst of all the excitement, cryptocurrency is going through the roof. Dogecoin's going through the roof. Look, we've been here before. Just because those things start to go up doesn't mean the market's done. Those things can go up for a month or two, for a week or two. We don't know. But when that stuff starts to happen, while it's lots of fun to cheerlead, what you really need to start doing is recognizing that there is froth in the market. Okay? And know what your exit strategy is. I'll leave it up to you to figure out how you want to handle it. I just shared with you what I'll be doing. This has been a pleasure. I look forward to working with you all on the desk at 9:30. So all Armor insiders on the desk at 9:30. Can't wait to trade with you. We'll be doing research all day. We'll be talking about different stocks that we're looking to add to the portfolio or the whiteboard. Of course, I take questions all day. Anybody's got a question, you could throw it out there, DM me, whatever. Give me a phone call if you want. You're an Armor insider. You have that right. If you want to do it yourself, subscribe to the Armor Report. You get this video live every morning before the market opens, and you go ahead and execute on your own all day. And of course, if you need me to, if you can't be on the desk, if you can't manage your own assets, I can do that for you if it makes sense for us. So let's chat about that if you want to. Feel free to give me a shout. All right, everybody, have a wonderful trading session, and I'll see you live on the desk at 9:30. Take care, guys.